Yo guys, how's it going? And in today's video, I wanted to go over why I have 5 different bank accounts / investment accounts. The other day I was talking to one of my friends and he was asking me why I have 5 different ones and what the need for is all of them. So I decided to make a video going over each one. They all have purpose. Some of them have more money in them than others. The main investment account is going to have a lot more money than like a smaller account. But I'm going to go over how much, I put into each one, what the purpose is, and why I have 5. 5 kind of seems like a large number for a 20-year-old dude who just, kind of just has day-to-day purchases. I don't really have any, I'm not filed as a corporation. I don't have a business in my name. So I could see myself having even more in the future if I end up running a business. But as of right now, personally, I have 5 different accounts. So I'll just go over them. The first 3 I'm just going to knock right off the bat are investment accounts. And the other 2 are just going to be a checking and savings account. But I'll go over each one of them. So the investment accounts, I have 3 of them. One is a Roth IRA through Vanguard, which is basically, if you don't know what a Roth IRA is, basically what you can do is put money into it after taxes are already taken out. So say you're an employee, you can take your money from your paycheck and put it into the Roth IRA, put it into different investments, and as long as you don't pull the money out before you retire, or in this instance, the age is 59 and a half, you can contribute $6,000 per year and invest tax-free and pull it out and not have to worry about it. Technically, since you've already paid taxes on it, it's just a really good account to have to invest when you're young. The only problem with the Roth IRA is when you get into higher tax brackets and more money is taken out in taxes. That's not really a problem for me because I haven't had any major income sources over the past couple of years. I've just had some pretty good investing habits where I regularly invest. So the Roth IRA is pretty good for me. I've maxed it out for the past 2 years, which is $6,000 per year. And, it's not bad. I put it into a bunch of index funds within the account, and it's just kind of something that I just let, cruise until retirement. After the Roth IRA, the 2 other investment accounts I'm going to have are traditional brokerage accounts, and one of them's through Robinhood, one of them's through M1 Finance. Personally, I don't use the M1 Finance one a whole lot just because I don't have an excess amount of cash that I'm just putting into brokerage accounts. I do use Robinhood a little, and honestly, I really only have a Robinhood account because the interface is so clean and I really like looking at stocks on it. It's really nice and it's really simple to buy stuff. I can explain to people stuff that I'm invested in. I can show them how to use it. It's just fun for me to use. I really enjoy using Robinhood as my traditional brokerage account. I know there's problems with them in the past with, them shutting down and their servers going down for a little bit. But since I don't have a large, majority of my assets in there, I think it's not a problem. I do use these accounts from time to time. Robinhood I'm on more than M1 Finance. But M1 Finance, if you don't know, is just another investment platform. You can actually open a Roth IRA through M1 Finance. I haven't because I have mine in Vanguard, but that's a pretty cool little feature they have. But the premise of M1 Finance, what makes them special, is by having this pie chart ability. Essentially, you can choose a bunch of different companies and make your own pie chart, and then say you just want to invest $50 a paycheck and you want it to go into each one of those companies. You can do that, which is really cool. You can manage a really diverse portfolio this way, and it's really cool. That's why I have the account in the first place. I just want to play around with it. I could see myself in the future putting a lot more money into it, once I have some more expendable income. At the moment, I don't, but I do think that M1 Finance is super cool, and it's just another investment account that I have open. The last 2 are just going to be a checking and a savings account. The reason why I have these accounts at different banks are for different reasons. My checking account is through Wells Fargo, which I know is not the best bank in the world, but I've never paid a single fee, like a monthly fee or anything. They've always had good customer service for me, and honestly, there's just a bunch of them locally where I am. I probably could go to a different bank and, get better benefits, I guess, but I really haven't been charged anything by the bank in the last 5 years that I've used them, so I haven't switched. As soon as I do anything major or they upset me and I have to pay fees, I will probably switch. But as of right now, I'm just kind of chilling with it. As to my savings account, I do it through Ally Financial, Ally Bank. If you watch videos on YouTube, you'll know that a lot of people recommend Ally Bank for a savings account because of their high interest that they pay out, which before the pandemic was 2.2%, which is really solid. Sadly, it's went down to 0.06%, 0.60%, which it's not bad. I mean, it's better than nothing, but at the same time, you wish you could be getting more. But I get more than the average savings account. It definitely gets me more interest than if I was to just leave it in a Wells Fargo savings account if I attach it to my checking account. If you want to count credit cards as bank accounts, I technically have one other Discover card, which is what I opened when I very first turned 18 so that I could establish a line of credit. I'm not going to include that in the title or thumbnail or anything. I just point that out. But it's not that hard to manage them all, mainly just because the breakdown is pretty simple. Whenever I was employed, I would have 90% of my paycheck go to my checking, 10% go to my savings right off the bat. From there, I would choose a number and stick with it each week, which I would put into my Roth IRA as well as my Robinhood account. Back when I was employed, the breakdown kind of went like this. If my paycheck was around $650 a week, which it was on like the regular week that I didn't work overtime, I would throw $500 into my Roth IRA and $50 into Robinhood. If it was higher, like if I worked an overtime shift, sometimes each week I could get paid between $850 to $1,200. So I would throw like $650, $700 into the Roth IRA and like $100 to $150 into Robinhood and M1 Finance. I would kind of split it up. But since I don't have a job now and I maxed out my Roth IRA for the year, any extra money I get that exceeds like a certain number in my checking account, I'll just throw it into Robinhood and put it into Vanguard's VTI. I believe it's Vanguard's total S&P 500 index, if I'm not mistaken. Correct me down in the comments. I think there's a chance that I'm wrong on that, but I have a lot of money in VTI on Robinhood, and then I just put it into some other stuff that I decide to invest in. It's nothing insane. Robinhood's not like a super big account for me. I just have it because I have it. But yeah, that's why I have 5 different bank accounts essentially. They all have like bank features. You could get a card through each one of them. If I'm not mistaken, you could get a card through M1 Finance. But it's not that hard to manage. Whenever I would, have a job and just be living day-to-day life, I would do all my purchases on my credit card. I'd pay it off at the end of the month. I would get cash back on that. I was regularly contributing to my Roth IRA, maxed out already for the year and last year. And then I would also be able to grow a traditional brokerage account. Now, I know you might be thinking, well, you're just some guy that I'm watching on YouTube and you just have like a good amount of money coming in. But truth be told is like I'm not even monetized yet. So this is just me living like my 20-year-old life, just how I manage my finances. And I've been able to grow a pretty good amount of wealth. Nothing insane because I don't have like a huge source of income, but it's just being, disciplined and frugal overall. I don't go out to eat a whole lot and I don't buy a whole lot of unnecessary stuff unless it really impacts my life on a larger scale. So I think that I've done pretty good so far. I definitely haven't done the best. I probably splurge in areas where I shouldn't, but this is just a really easy, lazy way that I like to manage my finances. It really doesn't take me long because I only have to pay the credit card off once a month before the end of the month. Everything else is automated. You can choose your investments. Like some people can just set it up to where $500 a week would go straight into an index fund. Me personally, I chose my investments when they would go into my Roth IRA. But that's just me. You don't have to do that. You can easily take this approach and make it super lazy. You don't have to really do much. This is honestly like a really simple way to run your finances. But yeah, let me know down in the comment section below how many bank accounts you have, as well as how you, how you manage them. Like, how does your money and your investments go? Do you automatically throw it into an index fund? Do you pick your investments yourself? Let me know what the most accounts you've had at one time is. Just, bank account talk down below. I'd love to talk to you, and I'll be answering every single comment. So just let me know down below what you think. And other than that, I hope you have a good day and enjoy the video.